everybody, and welcome to the first episode of Quarterly Learnings presented by Quarter Life Investor. My name is Andrew Pate, one of the co-founders of Quarter Life Investor, and I'm joined here on the bottom screen by my good friend Justin Holder. And on the left, on the other screen, is our other co-founder of Quarter Life Investor, Ryan Rand. Justin, why don't you quickly tell everybody kind of how you got your start in investing and what all you're up to nowadays in terms of the markets and everything.
Thanks, Pate. So like you said, I'm Justin Holder. I have very little experience with investing. I guess you could say I have 5 years in a 401k. That's about it. And just started investing this year and taking advice from these goons over here. I've been following the market for a little bit, but no real stake in the market. But just looking to get a little more experience and have some discussions with these guys. Ryan, I'll turn over to you, man. What's your experience?
First, I want to say I want to defend ourselves of nobody asked you to follow us.
No, absolutely not. So I get a little lucky success, so I decided to give you all a little follow.
All right, what's up, everybody? My name's Ryan. I'm co-founder of Quarter Life Investor, and I got my start in investing right when I graduated from college. I started to put my signing bonus into a Roth IRA and then kind of tried to build that up as quickly as I could through some high growth stocks. And now I've more than tripled my account.
Yeah, why don't you describe what some of those high growth strategies have been, Ryan?
Basically big bets and stuff that just keeps going up. And everyone gets mad at me when I tell them how much I made.
We don't recommend this, but good on you, man.
Yeah, I think it's a great time as any. None of us are CFAs. None of us are CFPs. Any stock references we make is purely for our opinions and in no way a recommendation to buy. And we will always try to be forthcoming with full disclosure of what we own at the time of filming. And yeah, you just shouldn't follow Ryan's advice also. But
yes, never follow my advice. I just get lucky every time.
Every time.
If it works 60% of the time, it works every time, or at least with Yeti stock like Ryan.
Yes.
Gosh.
So, but yeah, and just to follow on to that, I've been I did my first stock trade in 2017 when I was a junior at Texas A&M, sitting on my bed in my very desolate apartment. At the time, I remember opening my first E-Trade account with $500, and that has obviously grown since then. And I've been loving to do it ever since, and tracking the markets and trying to become a smarter investor. Hence the need for starting this podcast with 3 more dudes in their 20s that think they know what they're talking about with investing. So, welcome, everybody. We're glad to have you here, and hopefully you have still stayed on the video and are still watching and listening to us from this. And Justin, why don't you take us away on our first segment here to get us rolling on this first episode?
Sure, guys. Well, first off, do y'all know what week it is? Do y'all have any clue?
Shark Week.
Damn it. Yes, just Shark Week.
That was a guess, not gonna lie.
So if it's Shark Week, shouts out to Mark, Kevin, and Lori, right? It's a Shark Tank reference, guys. Come on.
Mr. Wonderful, Kevin O'Leary. That's the only one.
Thank you, Ryan. God dang. I know it's gonna fall flat, and I love it. No. Okay, so here's our real first segment. All right, if y'all are gonna describe your portfolio with a song title, what would it be? Hey, take it away, man.
So I thought long and hard for a whole maybe 90 seconds on this specific question. And to be honest, there's many songs that could. I originally came to God's Plan by Drake.
Oh my God.
Then I realized, no, that would be too easy. So, and wouldn't be an accurate descriptor of performance. So I then arrived at several of Travis Scott's recent songs. If I feel like some of them apply to if you own a lot of oil and gas stocks, you could have Houston Fornication, right? That would describe a lot of them. If you had a lot of Caterpillar and John Deere caught up in the country, but it might be a good describer. But probably the best one for mine. I can't even say it without laughing. It's the most frustrating thing. Let's go with a Sweet But Psycho, because that thing, I know it's doing well, but it's also completely infuriating at the same time.
Oh, yeah, I'd agree with that one. All right.
Top that, Ryan.
Ryan, what you got? If you don't have one, I got one for you.
What would yours be for mine?
Ryan, you are Dirty Little Secret by All American Rejects, because you somehow figure out how to do stuff.
A secret that he's acting upon.
Ryan's our little savant. Like, stuff he doesn't make any sense to us, but it always freaking works, and it's so frustrating. Like, if you weren't our friend, I don't think I would like you very much, just based on your portfolio. Like, hats off to your success, man, but it's so frustrating.
Yeah, it all started with good old Yeti. Started from the bottom. And I guess you could say now we're here, you know.
Didn't you hear me? We put a moratorium on Drake songs.
That is true. But no, I got into Yeti when it was like $12 a share, and it's up over 50 now. So it's been my old faithful. But no, I mean, there's several songs that come to mind. Another one's Time Bomb, because I know it. At some point, this thing's going to explode, and I'm going to fall on my ass and lose all this. So.
No, man, you're riding the wave. No, we're doing this right now. We're to talk some sense into you. That's the real reason we started this. I mean, we didn't tell you that, but that's why we started this thing.
Yeah, this is actually an intervention via Zoom, and you just didn't know that yet.
Yeah.
And I love how you also gave that answer with your wife in earshot too.
That is true.
Yeah, and now we have it on recording.
We'll mark this day right here and see.
Yeah, exactly. I think Peyton and I both have some screenshots of I probably shouldn't do this, but here's what I'm investing in today.
Or yeah, you're a resident momentum trader. That's a thing apparently. I believe we call those speculators, and they're now usually the moniker is Robinhood investors nowadays. Which
hey, stop. Speaking of, my song is Young, Dumb, and Broke, because I am a Robinhood investor. I've had some success. You know, I'm doing well. Although even though my first trade was, I want to say like March 2nd of this year. So right before the epic crash of the market, I was not feeling good in my first month. But I'm back and feeling great.
Hey, props to you for sticking with it. You know,
I was in already, so I just kept doubling down, and it worked. No, I follow some actually smart people, including y'all helping out, kind of what to look at. So I props to y'all. Yeah, Young, Dumb, and Broke, or My Own Worst Enemy would be another one I've got. As long as we're not hitting on free falling or landslide, I think we're all doing pretty well.
Yeah, anyways, mine is still Highest in the Room by Travis Scott. I win. Next segment.
Ooh, I don't know. I think Ryan's got you there. All right. So I think let's start with some actual real topics here. Okay, I think you brought this one up. Let's talk about some EVs. I'm excited for this one.
Yeah, so I just was curious to hear what y'all's thoughts were on not only obviously the impending future of electric vehicles. They're here. Justin, you and I live in Austin. We know that the Tesla horde
is coming, baby.
Here, and they are not leaving. And in fact, Tesla has just broken ground and is working day and night, starting 6 a.m. sharp on their new Gigafactory just outside of Austin. But I wanted to hear what y'all's thoughts were on not only would you ever consider purchasing an electric vehicle in the next, let's say, 2 to 5 years, maybe in the next 10 years, but also just kind of what do you think are going to be the opportunities moving forward after the most recent surge of names, such as obviously Tesla is the most notorious with their 5-to-1 stock split just announced and at all-time highs and over 200% higher since old Elon got in trouble with the SEC and said funding secured at 420. We've also got NIO, we've got Nikola, which is basically just a car company on the back of crayon drawings, and we've got Lordstown Motors that just came onto the markets via SPAC.
Lordstown, that's the winner. That's the winner.
That's the winner.
It might be.
But we also have Fisker coming through a SPAC. We have another one I saw today that my name
Helion.
linking. but is supposed to have a 500-mile range. It was in Morning Brew this morning, and you've also got all the legacy names involved with this. Ford is trying to get trucks up and running with Rivian. Volkswagen has got, I believe, a partnership with Ford, and they're not going away. So I know that was a lot of questions to kind of pose, but let's kick it off of, would you ever even consider owning an electrical vehicle for your personal situation within the next 2 to 5 years?
So like you said, Pate, man, I live in Austin. It's coming, it's here, it's been here for a while. I wanted to get in ground floor. I did not have the capital to do so. They're still too expensive for me, at least for something that's worth it. I would love to own an electric vehicle. I think it's great. I think it suits my needs pretty well, as long as it's big enough to handle me and my dog here. She's around here somewhere. But I like the idea of it. I think it's becoming a more regular thing, and I think we're actually making the shift. So maybe a little slower than some people expect. But don't call me a liberal cuck, but I would love to own an electric vehicle first off, and I think it's coming.
I don't think there's anything political to say you would like to not spend money on a lot of oil maintenance and engine maintenance.
Yeah, I know nothing about that, unfortunately.
Well, EVs don't have that, so you don't have to worry about it.
Exactly.
Yeah,
right.
So for me, I mean, living in San Antonio and my wife's in Dallas now, I was looking at, how far of a distance I would have to drive on one charge. And if they can expand it to 300-400 miles on a charge, I'm all in on it. And I mean, it's something I've looked at purchasing within the next 2 to 3 years, if they can make that more common. I think with competition, it's going to lower the prices of Tesla, hopefully, and allow more younger people to buy the cars right out of college instead of having to wait till they've made more money in order to make those payments. But as far as the stocks go, I think like 80% of them are going to fall flat and lose everything. I'm a big bear on the whole market in general.
That is not a advocation to go put shorts on to 80% of the EV stocks out there. Just saying, continue, Ryan.
It's not, but I mean, I think a lot of them are going to end up bankrupt, because I think the Fords and the Toyotas and the larger companies are just going to completely crush them.
So you're saying the companies with access to capital and scale of manufacturing are going to end up winning in the end of this, and
exactly.
Not necessarily Lordstown, like the Nikolas are going to be pushed to the wayside, and will just be kind of folklore in 5 years.
I don't know.
I do. I think. I mean, Tesla already has the huge market share. I don't know who's going to compete with that other than the big guys. I mean, I get the concepts of these other ones, but they're just all trying to become Tesla, and I don't think that's going to happen. That's my opinion on it, but I would love to see it, but I don't know. I mean, I've been bearish on Tesla, so I obviously didn't win that bet, but
man, I really think like the ones that try to beat Tesla, I think you're absolutely right. I think they're going to fall flat on their ass because they just can't compete. And the ones that are trying to take over any of the the big markets, Ford, GMC, all that stuff, like they're not going to be able to do it. But developing the technology, like developing the batteries themselves that those big companies can implement into their stuff, I think that's where they'll succeed in making joint ventures there. I know Hillian is one of the specs that's coming up. I think theirs goes. They tentatively announced in October, I believe, as of like yesterday. I think they were Q3 before, but now they're Q4. They're developing just battery technology, a little bit different than Nikola and Tesla's. And then Nikola is kind of disrupting the market a little bit, not with their cars. They do have the truck, and I think that's just a marketing ploy for the most part. But I think they're coming into it with their trucking industry and developing infrastructure for that specifically. That's their moneymaker. So if it does work, if it does go through and their CEOs shit the bed, which is totally a possibility, he's an idiot, but
what? Not him? No, not Trevor.
For a second, I was like, am I wrong here? Yeah, okay. I think they have heavy potential. I might be biased because I made a lot of money on them when they merged, and I got out immediately after, not late enough. But I think they have a potential to do something substantial. But in the car industry, no, Tesla is going to take over and the big industries are going to take over that, I think, if they're smart.
That requires them being smart, though, is the thing.
Adapt or die, man. Like it's where it's at. I think like Mercedes doing electric cars and self-driving cars, doing that stuff, being at the forefront of that is going to be helpful for them. I'm sure some of the American owners are going to do the same thing. Hopefully, for it to be seen. But
yeah, I think the two biggest hurdles or the biggest hurdle by far is people not thinking, the gas problem. I can't pull over on the side of the road, grab a Three Musketeers, put my Supreme unleaded in, and keep going on my way wherever I'm going, whether it's on a long road trip, whether it's go to Nana's house. So until the super fast charging infrastructure is truly built out, I think that's going to be a hurdle. It will decrease, I believe. And I believe the kind of mental block of, I don't want to own a EV for that reason, because the range isn't good enough, will eventually go away as technology improves. It's
infrastructure for sure.
Yeah. But that's less infrastructure and more product innovation. And
you think?
The battery itself, yes. Increasing range is not dependent on the actual infrastructure. It's going to be depending on refining who has the best battery, who has the better mousetrap, basically, because that's what humans inherently do. Like a golf club is not an inherently easy thing for most people to use, but it's just been improved throughout, however many years it's been, the 100+ years golf has been around, to what you have today with clubs that can hit it a mile, but still can be difficult for a beginner. You're going to see a lot of EVs and legacy motors put time and R&D money into their batteries to make them better and better and better, to try to get around the fact that the infrastructure, like you were talking about, may not be ready.
So they don't want to rely on these like gas stations getting electric charging station for every single one they have. Is that what you're saying? That makes sense. Yeah.
You're talking how many decades till that happens? Till every, we're all from Texas. How long until the podunk Texas towns get EV stations at the 7-Eleven? That's not happening for a long time. There's not even enough in Austin, San Antonio, Dallas. So
true. Unless they convert the toll roads or the HOV lanes into those magnetic strips that somehow charge while you run through it. But we'll see if that even happens.
Yeah, I don't know. I think these CEOs, they know how to hype it up. But like, we're still, like y'all are saying, decades away from these companies being like truly successful. I think like Tesla just turned a profit. I mean, they've been around for a long time. Like these other ones are just, they're going to have to be thinned out at some point. So it's risky it's all the Robinhood people just pumping those stocks. So
yeah, I'm less worried about Tesla's stock in terms of valuation. Like I'm not looking at it from that standpoint. It wasn't that long ago since Elon was sleeping in his office just to meet delivery goals. And that was to meet delivery goals. And they didn't for a long time. And that's why Tesla stock is one of the biggest winners of the year, is because it was so far down in the dumps because people didn't believe that they could potentially survive for another 9 months with the cash they had on hand, trying to get their delivery goals met. But I think the most curious part is the fact that the Asian Pacific, especially, and more importantly, China market is so far ahead of North America and Europe in electric vehicles, in terms of just gross aggregate numbers, that's where the money is at the moment. And that's why you're seeing companies like NIO and one called Candy, I believe, just came to the US, do very well, obviously, over there. And then you have Tesla over there also trying to expand market share at the moment, because the infrastructure is more so there. There's a bigger total addressable market. and probably one that's not as resistant to change if you can lower the price point over there, which I admittedly don't know enough about the Chinese EV market price points to opine on that specific point.
Yeah.
Yeah, Tesla was the number one in terms of sales in July. I know that. Like NIO is still, it's going to take them a while to catch up. But I think that's probably one that will. I think NIO's seems like a good one to potentially invest in. Not that I would, but because I'm a bear.
Because that's definitely not contradictory.
I
believe
wouldn't,
it, but nah, too much risk.
If you want to take the risk, that would be one that I think could run up. I mean, if the market continues to expand. I mean, look at it, was like $12 a share. I mean, it's definitely
not much downside.
Yeah, not as much downside risk as Tesla or the other developed ones.
I would say none are developed except other than Tesla.
That's true.
Yeah.
Anyway,
Lord's time.
Well, I guess speaking of Tesla, let's go ahead and jump to our next topic. I think Ryan, you want to talk a little bit about, or at least lead us off about stock splits. Let's jump on that.
For stock splits, I mean, I think one of the main reasons why Apple and Tesla are trying to split their stocks is because they want to become more attractive to maybe people that are scared of investing in something that's that expensive. So if you split your stock 5 times, you're going to attract someone that has maybe $10,000 worth of investable money, as opposed to someone who has like 100,000. They're not scared of a $1,500 per share. So I think when the stock split, I mean, in theory, you're just, if you have 10 shares, now you have 50. And so
for Tesla, yeah,
you got to hope that it runs back up to 1,500, and then you're making tons of money. So I think why the companies do it, I mean, I think it's just to attract more investments to further their R&D, and I think that's what Tesla's trying to do. And
well, that and not just for the common investor, I think it's also for their employees too. It opens up for more availability to their employees to buy into their shares.
Yep.
In the right pay. That's my understanding of it.
Yeah, I think that's a good point. I hadn't thought about that one as much, so that I think that's a really good point. It's a great way to reward your employees and also re-incentivize them to continue where the track they've been going, obviously, because it's been successful to date. You want them to keep going in that same direction now that they have even more stock, and they're more incentivized to increase that as much as they can with good performance. And then, Ryan, so I think it's an interesting point of, you're talking about somebody who might be, I think there's a difference between those who are wary of the valuation of all these companies at the moment, because right now, big tech, and when I say big tech, I'm meaning, Facebook, Apple, Amazon, Microsoft. I missed one, Google, and they're all trading 30 plus next year's price to earnings. It's multiple. It's kind of insane, but they are money printing machines. But when you get people that are more cautious of valuations and not, let's say, an individual investor that is just throwing money in them because they're a popular stock, you have to find some way to kind of bring them back in the fold. And I think that those types of investors, which I'm one of, is more likely to invest in $100 of Apple stock and get a few shares of that, rather than throw however much into 460 or whatever it is right now. And it opens it up to the poorer investors, and I'm not meaning poor in a derogatory sense, usually skews younger, like our cohort of people that just got started investing, only have their stimulus check or however much they have in their savings, and they want to start putting that money to work in the market. Well, what are you going to buy? 1 share of Amazon, or are you going to go try to buy 5 shares of Tesla?
Right.
Or 3 shares of Tesla, I guess would be a better example, because that's been broken up. I do know fractional shares are a thing, but I do believe the psychology, especially in younger male investors, of nobody wants to say they own 6 fractional shares of Apple. They want to say they own 60 shares of Apple.
It's definitely like a lot of psychological thing. I mean, it doesn't change the valuation of the company, I don't think, at all, except for when it gets more of a pump into the system of shares.
Yeah, not on book value. It's
right,
it's
exactly.
10 pins, or do you have $100 bill? Do you have a Benjamin? So
the only thing that I'm worried of is like, so with Apple and the Dow, I mean, I think it's going to impact like their upward movement. So it's been one of the Dow's like best performing stocks, obviously. Mm-hmm. And I don't see it continuing to grow at the rate it is when the split happens. I mean, it's something that's good for like institutional investors because they get more shares, but I think as far as like percentage growth, it's going to be trimmed a little bit just in the short term, but long term, it's going to even out and be fine.
See, I think it can be a net benefit though, because having your most popular index, which I would argue the Dow is, whether it's not necessarily the one you want to be looking at of all the indices on, overall stock market activity and what we'll say for brevity is health. You don't want Apple controlling such a massive stake in it, because when it's going up, it's great. When it's going down, it's terrible. So it's just I think there are benefits to it not having as much influence on the Dow, and it can tie more back to the performance of the other 29 companies in the Dow, rather than just what has Apple done today. And that determines whether or not my portfolio had a good day.
Right.
That's true. That's a good point.
So when these stocks split, I feel like I've seen an initial rise in their percent change. Is that what y'all are seeing too? I mean, at least with Tesla's immediate one, and then what was the most recent one? The very most recent Apple. I guess Apple was the most recent, and they significantly jumped right away. Is that only because there's just such a heavy pump or expectation of a heavy pump in with younger investors?
Yeah.
Or is there other stuff to it?
I think it's an unanswerable question. There's probably 1,500 factors at play.
Right.
I think a big one is the fact that so many people I think you have institutional players running it. And by running it, I mean buying more and more every day, making it go higher and dragging the retail investors to also pay more. You also have short sellers trying to cover their positions and trim their losses. And it's going to probably run until it splits. And after it splits, it may continue to run because you'll have this flurry of buying of new shares that are all available in the market once people sell. And we'll just have to see what happens. I'm having zero experience with stock splits.
Right. So I bring it up. I know in our little text, you mentioned that 99 there were 25 splits
I heard
because of the .com burst.
Yeah, I heard that on CNBC today. In 1999, which was a great year for tech stocks, wink wink, was there were 25 stock splits because from what I gathered, that so many of the companies were, I was 5 when this happened, so obviously I wasn't following stock markets then, but
I hope not.
hey, it could have been a little Warren, you never know. But
Ryan might have been.
It was just a way to keep it going up. As a way by lowering the share price, even though you're not changing the face value of the company or the market cap on face value at least, or book value for that matter, you're going to have it be more accessible to buying, and it keeps going up. And as Davey Day Trader says, stock can only go up, and that's all they've been doing right now. So,
yeah, I wouldn't be surprised to see like Shopify or any of these others that have run up to like 1,000 a share. I mean,
Yeah,
it would just attract more investors, and that's a Davey Day Trader favorite. Shopify.
Hell, the Canadians, dude, up in the Shopify, but you got to Amazon. The 3,000 to 3,200 a share right now. There, and showing no sign of slowing down, because why should it until any sort of antitrust regulation is levied against it? And if anything, the pandemic has strengthened Amazon's position in the market.
Yeah, I remember when that was it was like 800 a share. We were like, oh, we should get in. but we thought it was too expensive, and now it's like 3,800 or something.
Well, I don't remember this conversation because I might have gotten it at 800.
Oh, fuck you.
And then we all know Shopify. When we were in Utah, and it was like 180 a share, and now it's at 1,000. I mean, literally, we're all idiots for not just holding on to that one.
Well, we also didn't foresee, the world shutting down and e-commerce being accelerated by 5 to 10 years. But yeah,
it just sucks. But I'll never forget that one.
I mean, that's the name of the market, man. It's like what could have been.
Well, that's
game
why I
play all the time.
A lot more to a lot less trading, having owned Amazon, Tesla, and Shopify, all at a lot lower numbers than they are right now, and more to investing and trying to reap advantages of companies that do inherently move higher, and it's worked out well in the short term so far. Obviously, because everyone's made, except short sellers, have made money in the short term, unless you've owned like a cruise line, or an airline. So that's kind of why I had the change of strategy for that. But stock splits is depressing me. Let's move on.
All right. Well, I guess speaking of transitions, let's talk about Zillow for a little bit. This is my topic. So I came across that Zillow is apparently planning on rolling out what they call Zillow 2.0 or Zillow Group is what they're calling it, and they are basically, I mean, long story short, buying and selling homes through their app and through their system, and basically utilizing what they call, what they're now calling Zillow 1.0, which is what everyone is familiar with.
Yeah, it's what you use to stalk with your coworkers and where they live and try to reverse engineer salaries, or does everyone else not?
Right. I mean, I'm not going to admit to that, but yeah. Anyway, they're basically using their old system to create this new system and do an innovative technology and finance mortgages. And so it cuts out a lot of the other. If you're using this, it's going to cut out a lot of the other companies that are being the middlemen for the process of buying a home, and they're going to be a one-stop shop. And so I kind of want to talk to y'all about this. I currently am not investing in Zillow yet. I'm thinking about it, and I just kind of want to talk through it with y'all. In my opinion, I think they're a great company even without this new system. But this could, potentially launch them into the stratosphere, or at least give them a good jump here in the next 2 years or so. Anyway, what do y'all think about it?
Yeah, I'm a big time Zillow fan. I mean, literally just out walking the dog. You're like, what do you think about when you're trying to see how much a house costs?
Exactly.
You go to Zillow and you look that shit up. And then you realize how poor you are because these houses are like $3 million and they don't even look that big.
And you start doing the math and you're like, I got to put down minimum of like 5%. Like, holy shit. Like, that's going to kill me. Hey, KK.
Yeah,
but no, I mean,
listening audio, Ryan's wife has made an appearance in the background, probably getting some more kombucha or milk or something in the background.
There's a good chance that it's wine. That's going to be
hey, nothing wrong with that.
Weekly occurrence.
There you go, babe.
Oh yeah, baby.
Already down.
But no, Zillow, I mean, that's going to continue to go up, I think. And with the added mortgage opportunity, I mean, that's going to take share from, Rocket Mortgage just went public. That's one I've been looking at actually to get in.
Was that a SPAC?
I don't know, but it's ticker RKT. They IPO at 18 a share. And
yeah, I just remember seeing it maybe yesterday, and then it's like, oh, and that Rocket Companies is public now. It's like, okay, didn't know that was happening.
I like it because mortgage rates are so low. Everybody's buying houses. That's one I'm looking at, and I didn't really know Zillow was doing that with mortgage, but that just adds value.
I came across the other day, and I was like, this is genius. It's probably hard to do, but it's great for them. Honestly, like think about all the people that are, buying and flipping houses as a living, as that's their investment. Basically Zillow is able to do that with a large volume of houses. And so they're probably going to get burned on a couple, but like over the long haul, I mean, they have an opportunity to make a lot of money for their company if they're able to do it all in house, in my opinion.
I'll be curious to, we'll never know this, I guess, who their true target market for that is. Is it quote unquote house flippers? Yeah, I'm not meaning that in terms of age. I'm meaning that in terms of desired outcome. So if it's a house flipper trying to flip it and just trying not to pay brokerage costs, like that makes sense. I think it also makes sense for people that don't either want to deal with a real estate agent or don't know one, or feel like and just are completely risk averse to paying closing costs, and getting their house sold. I think that's probably a very big value add from the Zillow standpoint, especially when you're already arguably the brand leader amongst other names like Realtor.com and Redfin. So what do? You try to completely wall in your platform of this, like you said, Justin, this is a one-stop shop opportunity for you to get rid of your home as quick as possible. We'll take it off your hands and we'll deal with selling it so that you can have your cash. You can go and look for where you want to go next. And look, you can do that on our website. Who knew? Our original purpose.
Yeah, I mean, I think they have their own appraisers and everything, and they give you fair market for your home. I'm sure they might cut corners a little bit, but I mean, yeah, like you're saying, if you don't have to have your house on the market for a year, 2 years, or whatever, and they're willing to buy it right away and do what they want to do with it. I don't know if it's from a local standpoint or what.
That's it. I think that's
a big question.
I think it's removing the risk of your house sitting on the market, which when you live in Austin is not a risk at the moment because we are one of the hottest real estate markets in the world. But when you live in Omaha, might not be the
Ohio.
Same. Yeah, or Ohio. And Justin's, we don't know why I hate for Ohio. Sorry, any Ohioans that may ever listen to this.
I'm not sorry.
Okay.
Come at me, DM me, let's go.
At him on Twitter, everybody. Anyway, but yeah, I think that it's what it is. It's removing the risk of your house sitting on the market and shortening the timeline to funds, basically.
Yeah, I agree, man.
I think it's a great idea. But as someone who's considering buying a home in Austin, because I'm an idiot and will buy at all-time highs, even though mortgage rates are low, it just the way I look at it, it's entirely. I've been using Zillow primarily. I do need to use the other sites just to see if the choice is much different. But it's good. It's an easy enough interface, to see what's available. And I could definitely see the value add of my dad's in real estate, so I don't need to rely on Zillow to broker anything for me or take on or get like you said, get a mortgage from them or anything or get financed by them, thankfully. But I can definitely see the value add of if you just moved here, which a lot of people are doing, and you are going to buy a house and you don't know where to start and you don't have any banking relationships or you don't know even the names of any local banks in the area, that could be an attractive option for sure.
Yeah, I mean, so another example is my in-laws just sold a house in McKinney. It was their parents' house had passed away, and the person who ended up buying the house after it was on the market for like 3-4 months actually found it through Zillow. They didn't drive by. The real estate agent didn't market it in like any other source through, the old school real estate. No open houses, no nothing. They found it all through Zillow. And that's just one example of how someone who's even in their like 50s or 60s are still using this tool. It can really go towards anybody.
It's permeated the boomers. The boomers have access to it, which means the money has access to it. Because let's be real, millennials and below don't own houses. So,
I think this new implementation is targeting us though, at least for who it's selling to. But it's a long play. We are the upcoming generation. That's going to be buying houses. They're reshuffling of the market. We're looking at different style homes than like our parents were. You know, I think probably smaller homes with less
Let me
acreage and
guess.
stuff.
It's a box. It has lots of glass, and
Is
there's
there a
wood and metal involved somehow.
exactly? Is there a porch? Is there a small yard for my dog? Not my kids. I'm not having kids until I'm 40. And is there a room for my home office that's going to be dope as hell?
And not the one you're currently in.
Dang,
Not the longer, no.
Zillow's already
Okay.
run a lot this year, though.
It has.
I'm not that concerned though. You know, it's already a mature market. Well, I don't know if I should say that. It's already the brand leader, and they're just figuring out how to truly monetize it. I feel like in terms of growth, earnings growth. I'm not that concerned. If which I have missed a 10-point move on it. It was more of a, hey, that would be one I'd like to invest in, but
well, to make you feel any better, it moved 25% when they announced the Zillow 2.0, and then it came back down to where it was basically right before. I think if it drops below 75, I'm probably gonna get in a little bit just to follow a little closer.
Just to have some exposure to it. Yeah.
Not recommending it, just making that clear. That's just my personal opinion.
If you're following any of our stock picks, you're too stupid to be investing.
Yes, please do your own research. Take these discussions, you know, at face value. You never know.
But bet the house on Lordstown.
No, in the podcast now.
Do not endorse. Cut it out.
They're from Ohio. They're going to make great electric trucks, man.
Oh, God, get out, Ohio.
I'm thinking, I'm thinking for me personally, like I might consider an EV.
Yeah.
I just like SUVs, man. I've got a Q5 right now. I've had an F-150. I've had a Honda Pilot in the past, and a Nissan Pathfinder. I'm not really looking to get a car, but the Model X's are so expensive. So it's,
so expensive.
An addressable market. It's not tapped yet.
Get the Nikola Badger, man.
First, it has to make it off the piece of paper and crayon and straw
to
actually be driven down something.
You know who's committed to buying one right now? Shaq.
Okay. Let me get,
sponsoring.
Let me get all of the sponsorship deals first in place for myself. Let me get how many salaries from the Lakers and Magic and wherever else he played that I forget afterwards. And then I'll commit to buying one.
And Papa John's Pizza now.
Yeah, being a board member of Papa John's, that, is a nice salary. I feel like the general commercials probably pay pretty well while he's bench pressing with one arm on the CGI screen.
He was on Shark Week too this week.
Yeah, he was. Dude, everything he touches turns to gold.
I love Shaq. Shaq Life is a hilarious show, and you need to watch it. And I think we just had a look at the great, full circle we did, coming all the way back to Justin's terrible Shark Week joke at the beginning.
Hell yeah. That's unplanned completely. Did not flop in the long term. I'm king. Peace out.
Everybody, make sure you hit that subscribe button right below us, because we wouldn't be true YouTubers if we didn't say for you to do that. Love to follow, sign up on our website, quarterlifeinvestor.com. Hit that subscribe button. We will see you next time.
Peace.
Peace out.